Veritone stock is up 64% this year, trading around $5.37. And analysts think it could go as high as $25. That's as much as 5 times upside. My question is, can this AI company actually pull that off, or is Wall Street crazy? I mean, I've been going over Veritone's latest earnings, and honestly, I'm bullish, but not for the reasons you might have been hearing. I mean, this company isn't just another AI play. They've built one of the world's first AI operating systems called aiWARE that's already helping government agencies and major enterprises manage everything from media content to biometric data. In Q3, revenue jumped 32%, with software sales up 55%. And that's even after committing to pay down 100% of its senior debt. And they still guided for another 21% of full-year growth. That's not hype, it's execution. And the signal that I'm watching, they expect to reach profitability by next year. And the math, it checks out. If they hit their Q4 revenue target, $39 million, their losses could shrink nearly in half. That's a clear path to a turnaround I haven't heard anybody else talk about. Hey, what's up? My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. That's a good thing. I break down the numbers so retail investors like us can make smarter, more confident decisions with our money. And that's why in this video, I'm going to show you exactly why I think Veritone's AI business model could make this one of the most overlooked comeback stories in the entire market. Veritone is the company behind one of the world's first AI operating systems, built with a clear mission to use artificial intelligence to make businesses and society smarter. Sounds ambitious, right? Well, actually it is, and that's exactly why this stock has my attention. At the heart of what they do is aiWARE, a powerful and flexible platform that brings together multiple AI technologies into one ecosystem. It blends generative AI, vision, speech, audio, and even biometric tools to help organizations design and tailor intelligent workflows for their specific goals. In English, it's like the glue that helps different AI models work together seamlessly, whether it's for the government or for big enterprise. aiWARE supports a wide range of applications across both commercial and government sectors, and its open architecture allows new models and features to be integrated easily, allowing the platform to continually evolve and improve. And that kind of scalability matters because AI is evolving fast, and whoever adapts the quickest wins. So my question is, can Veritone stay ahead long enough to capture some serious market share? Well, let's find out. So Veritone generates most of their revenue from the software products and services segment. This includes aiWARE, hiring solutions, and professional services that assist clients in integrating and managing these technologies. Now, these offerings serve a wide range of users across commercial and government sectors. Their managed services segment adds a smaller but steady stream of income through the Digital Media Hub, which handles the content management, licensing, and influencer programs for enterprise clients. So one side builds and scales AI tools while the other manages media. It's a blend of innovation and recurring revenue, and that mix is shifting fast towards the higher margin AI business. And keep that in mind, because the Digital Media Hub, well, this is a cloud-based AI-powered media management platform that helps rights holders store, organize, and share their content securely with partners, news outlets, and corporate clients. It features smart search, content discovery, and detailed reporting tools that make it easy for users to find what they need while giving rights holders insight into downloads and which content gets the most engagement. Digital Media Hub is kind of like an AI librarian for enterprise media, and the insights that it produces could become a hidden growth driver down the line. But I don't think that's what's driving the stock right now. Now, anyone who spends some time doing stock and market research knows that it can be a lot of work. Thankfully, I found Moomoo as a company that can streamline my research process, and let me tell you, it's been doing wonders for me. I think the absolute best feature for Moomoo is their AI assistant. Before that, I used to cross-check every metric, value, and news item across many sources, which ate up precious time. Now, all I need to do is type in my question into the AI, and voila, everything I need is right here. From options and stock analytics, growth catalysts, technical analysis outlooks, and the entire trade process, step by step, all in one platform. It's like ChatGPT, but with full access to real-time market data, so you'll get in-depth and pinpoint analysis instead of the usual vague vanilla responses with outdated data that you'd find in other platforms. Plus, it comes with access to Morningstar reports, all for free. That alone saves you hundreds of dollars a year. And if that's not enough, new and qualified users from the US can get up to $1,000 of NVIDIA stock and up to 8.1% APY for a limited time with their cash sweep program. If that sounds good, scan this QR code or check the link in the description and see why 27 million users trust Moomoo for their everyday trading needs. Let's talk about the numbers, right? Veritone stock recently closed at $5.37 with a market cap of around $338 million. When it comes to volatility, though, the stock has a 60-month beta of 3.29, which means it's about 3 times higher than the broad market. So this isn't the stock for the faint of heart. It swings hard, and that volatility can be your best friend or your worst enemy depending on the timing. Now, despite the recent drop, Veritone is still up over a longer time period. Year to date, the stock has gone up about 64%, while over the last 52 weeks, it's up around 50%. So momentum is clearly building, but momentum alone doesn't make money. The fundamentals do. Now, the company recently released its third quarter results, and a few people on my Discord channel brought this up, so let's dive into it. Reported revenue came in at $29.1 million, which was up 32%. Meanwhile, the company's net losses increased by around 24% to $26.9 million, and that resulted in an earnings per share or a loss per share of 41 cents. This is an improvement, however, from last year's 59-cent a share loss. So while they're still losing money, they're losing less of it. And that's actually a big deal in a turnaround phase. And contributing to this quarter's revenue is $22.8 million from the software products and services segment. That was up 55% year over year. And that was driven mainly by strong growth from the company's items and VDR initiatives. When excluding Veritone Hire, this increased by over 200% compared to last year, and that reflects the accelerating demand for Veritone's AI-driven software solution. That's real traction. When one business line item can grow 200% year over year, it's not luck, it's product market fit. Managed services also brought in $6.3 million for the quarter, down 14% year over year, as the company continues to change their focus towards higher margin, technology-driven offerings that scale more efficiently across both commercial and government clients. In other words, they're pruning the weaker branches to grow stronger ones. I say it's smart, even if the short-term numbers don't look quite even. Now, Veritone also has a current ratio of 1.31. What does that mean? It means that they have $1.31 in current assets to cover every dollar in current liabilities. So it tells us they have a reasonable amount of liquidity as its short-term assets exceed its short-term obligation. And while the ratio is above 1, it suggests that Veritone can meet its immediate liabilities. So it's not excessively high. It tells me that they're liquid enough to cover the bills, but lean enough to stay efficient, not bloated. And that is exactly what you want in a scaling tech company. The company is also making steps to manage debt, as seen here, where management just announced that they're going to be paying down 100% of their senior secured term debt and about 50% of their convertible notes. That's not just financial housekeeping, that's confidence. You don't pay off your debt this aggressively unless you believe that the cash flow is going to come in. I see it as Veritone setting itself up for a cleaner balance sheet before its next phase of growth, and that's going to be worth watching. In terms of the next quarter, management guided for fourth quarter 2025 revenue to come in around or between $33.4 and $39.4 million, And then non-GAAP or adjusted net loss is projected to narrow to between $1.5 and $5 million. Now, adjusted or non-GAAP removes all those non-recurring expenses, like from the final numbers. If the company reaches that goal, it'll be a meaningful improvement from the $9.7 million loss that it recorded in the fourth quarter of 2024. For the full year, revenue is expected to land between 109 and 115 million, and that would represent an annual growth rate of about 21% at the midpoint. Non-GAAP net loss is expected to end somewhere between 26 and 31.6 million, which would represent as much as 29% year-over-year improvement as Veritone continues to scale its AI-driven business model and move closer to profitability. And that's the kind of compounding improvement that you want to see quarter over quarter. Not hype, not headlines, but real execution. Even better, and probably most importantly, the company expects to reach profitability in the second half of 2026. And if they do, the market won't wait until 2026 to reprice the stock. It'll move the second that profitability looks inevitable. So the setup's clear. If the next few quarters can confirm the trend, Veritone's upside could be massive. So that's it for Veritone's third quarter financial update. And before I continue, if you enjoy these kind of videos and you want more, be sure to watch out because I publish these videos just about every single day. So is Veritone stock a buy at these levels? Well, to answer that, let's see what Wall Street says. A consensus among analysts that cover Veritone rates it a moderate buy. This comes with a high target price of $25, and that suggests the stock could 5x over the next year. Now, I learned that analyst targets don't always hit, but when there's that much spread between price and target, it usually means that something is brewing, and maybe that's profitability. I mean, Veritone's third quarter numbers prove that its AI-driven transformation is gaining momentum, with strong growth in software products offsetting the decline in managed services. They've got some solid revenue growth and narrowing projected losses, which point to a company that's steadily moving towards profitability while maintaining healthy liquidity. And with management guiding for continued top-line expansion and improved margins in the coming quarters, Veritone appears to me well-positioned to strengthen its foothold across both commercial and government sectors as demand for scalable AI solutions accelerates. So to me, this looks like less of a recovery story and more of a reinvention story. And the market loves these kind of stories. But what about you? Do you think that Veritone can keep building momentum and turn this growth into long-term profitability? Let me know in the comments below. And while you're there, if you found the video helpful, do like and subscribe because it helps others find the video, it supports the channel, and of course you won't miss out on any of my future deep dives. Well folks, that's it for me today. I want to thank you so much for watching, and I'll see you next time.